ACSA says the period under review has been difficult as the economy was slowly recovering from the devastation of the pandemic that saw South Africa being red listed in some European countries. The Russia-Ukraine conflict broke, pushing up the cost of jet fuel by about 10 to 20%. The subsequent rising cost of living, reducing household disposable income, has reduced demand for air travel.
In increasing costs of living, the impacts of the Eastern European war have also dampened consumer demand on air travel. In the domestic market, we suffered significantly from the ongoing load shedding, which generally slowed down economic growth. Importantly, the South African Reserve Bank has indicated an expected 2% GDP for 2020. And importantly, the worsening domestic inflation is expected to really hamper real disposable income and therefore impacting on travel and tourism expenditure due to the adverse economic conditions.
While the company has made a loss, it is significantly reduced compared to the previous year, signaling recovery. The company says it is in a better position, though it's still operating at below the pre-pandemic levels. The continued Russia-Ukraine conflict remains a risk for the aviation industry.
War in Ukraine, which has obviously caused the oil prices to increase and consequently the jet fuel price. And obviously the cost of traveling will be impacted by that and then slowing the demand. So that is something that we see affecting the global industry. Locally, as we are aware, we've had a couple of bankruptcies in aviation. We've got Com Air now that is currently on liquidation. Yesterday we heard that SA Express also went into final liquidation. Mango is still on business rescue as well. So those are the challenges that will affect, obviously, just the capacity in the market and just the return in demand. But we are very confident that even a smaller aviation industry in South Africa should possibly become more profitable and be able to increase their capacity.
The company says it has a limited capital expenditure budget of R1 billion per annum, primarily focused on maintenance and the refurbishment of infrastructure. The lockdown restrictions and supply chain challenges have hampered capital expansion programs. Gloria Sefago Musi, SABC News, Johannesburg.